It's the Tip Trader. Welcome to my YouTube. This is my first video, so without further ado, I have a banger video. Today we're going to go over supply and demand. It's going to be very effective, very reliable, and it's a four-step process. Four-step process on entering a suitable trade. So before we get into the video, a little bit about myself. My name is TipFX, the Tip Trader, and I've been a day trader for about 7 years. Been pretty much day trading full time for the last 4 to 5 years. So with that being said, this is my first year doing futures, and I've managed to get right under six figures with a few more payouts that I have pending. I'll most likely hit my mark of 100K this year. With that being said, let's get straight to the video. These are the four steps. Four steps to finding a very effective way to trade supply and demand. Number one, we're going to find a higher time frame trend, and that's more so on the 4 hours, a daily, weekly, 4 hours and up. So once you find the higher time frame trend, we're going to wait for swing lows or swing highs to be made or a break of structure. Once we find that break of structure, we're going to wait for previous supply demand zone being retested. Once we wait for previous supply demand zone to be retested, then we find a suitable entry for the next swing high or the swing low. All right, so let's get into it. Let's go to the hour. First of all, let's go to our 4 hour time frame. And right now it's looking pretty bearish right now. So for this week, and it is Sunday, so market didn't open earlier. We are looking for swing lows. We're looking for more lows. And that's right now. So we're gonna go to the previous day, which was Friday, market open. And we're just gonna back test this strategy real quick. And we're just gonna see how we get reactions in the market. Keep in mind that when we're talking about supply and demand, supply is where we're looking for selling pressure upon a resistance area. So we're looking for it to go down. And then demand is what we're looking for buying pressure to go up. And that's what the market does on a daily basis, is fighting against each other. The buys trying to overcome the sales trying to overcome the buys, and you got pressure in certain areas, in certain key areas where market makes impulse moves, and then you got liquidity moves, sweeps, swing highs, back down to the demand zone, then the next high. That's all price does. So when you get the sweet spot where you can get in and with volume catch 50, 100, 200 ticks points, that's when you can, effectively, and it's not always about the whole move. As long as you can catch, whether it's one to ones, one to twos consistently, man, you do damage on these accounts and you get payouts consistently though. It's all about really trading less and understanding your setup. So let's go here, Friday's price action. And we're looking for is a swing high or a swing low. And if you don't know what a swing high is or a swing low is, it's basically just when price, there we go, when price swing past the previous low. So a swing low was just made. We're gonna be using maybe two tools, two, three tools. And I'll tell you guys in a few. So right here was the previous low. You want an obvious swing low. So you want an obvious break, but more important, a close below. And this close below. So this is a swing low that was made. And now we're looking for supply to be met and fulfilled. Then it'll make the next swing low. And when we want to get in, sellers come in and make more of a push. So swing low was made. We've seen the higher time frame is somewhat bearish. Now we're looking for sweep of the lows or highs to be made. So the lower time frame, right there, that's a low. That's a low being swept. So therefore, this is invalid. This red line is low. So this is the real sweep. This is on NAS 100. So lows was swept. Now we're looking for opportunity. We're looking for the retest of the supply and demand zone to now look for the next leg or the next push to be made. So when you see price being swept, you would like to ideally pull out your fib and mark your zones. This is the 50. Then you have these other zones of supply. We got supply in this area, and then you want to go to your lower time frame to see exactly what is happening. Because once price start pushing down, we want to be in the trade to then go to the next leg. So this is where you try to find a suitable trade, and ideally that comes with discretion and time through the market. So what we're gonna do is we're gonna sit here and watch how this plays out. So now we have our first bearish candle being made, and we have wick rejection. And wicks mean exhaustion. Anytime you see wicks, usually price is exhausted and it goes the other direction. So when the markets are exhausted, that means it needs breather room to make the new low or new high. So this is a good indication right here. We have support, which then became resistance right here. Price didn't want to break above this, made a bearish candle. And then we have the next bearish candle on the 5-minute. Looks like this. Even though this is a bullish engulfing, we still have this uh, bearish candlestick being made. Let's go back to the 1. We got another wick rejection. Price never came above the 50. This is somewhat a double top. And we have this bearish candle. So it was to get in here, put our we put our stop loss on the previous high. Put our stop loss on the previous high, then we go for our set take profits and our set levels. Very simple with the fibs. This will be your first take profit, -27. Second take profit. You got your first take profit, second take profit, and then so on. Third take profit. So you got your take profit set. You got your stop loss set right behind this high. And you just let the trade play out. Let the trade play out, and then from there, you just wait. So now we got another bullish candle met by engulfing bearish candle. We're down at the equal lows. We got that swing low being made. Close to take profit 1. Still close. Take profit 1 hit. Take profit 2 hit. Got a bullish candles forming. And then we still at the equal lows. Swept. And we go all the way down to take profit 3, 4.5 to 1. Trade risk to reward, which ultimately is a banger trade. So that's one way to use this strategy to find great supply and demand areas. Let's see what else the market has to offer. So now looking for another trade. So this is definitely a downtrend. This same strategy is very good as far as it's good for counter trends as well, as long as you know how to get out the trade. So let me show you a good example. Equal lows, and then when price breaks upon and breaks past the previous recent high. Here we go. Price is making another equal low, another equal high, a lower high, a higher low, and eventually what price does is pass it blow past the relevant high right here, and it went past this relevant high. This relevant high could have been enough alone because it was the most recent. So now that high was broke, we can take out our fibs, go to the 1 minute, pop that bad boy up to the recent highs, the swing low, the swing high. You gotta understand they happen pretty quick. So we got the swing low, the swing high, and we have a 61.8 rejection. Let's go back a little bit. So as it's coming down, it went ahead and touched it. And this is on a 1 minute. So then we have a bullish engulfing candle, which is a very good indication that price wants to go higher. Followed by that, we have another bullish candle. So right here, we're gonna base this off this candle close, and we're gonna put it right past. You can be safe and go down here. You can put it down here behind this high. I'm gonna put it like right past here. This is maybe right here is what 39 ticks. And your take profit is always going to be substantial. It's going to be perception. Some people use 0 as the take profit when -2.7 as take profit 2. It doesn't have to be what I'm making. It could be what you want. In this case, I would make this take profit 1, right? Take profit 1, take profit 2. The deeper it is, like 0 0.5, 0.7, you definitely want to change it, because if it's a 78.6 retracement, you got all this compared to 50, which is this, and then you would make this your take profit 2 or 1. Now let's see how this plays out. We got a break and retest, which is another confirmation. We got a break and retest. It broke it. We retested, which is another confluence. And that's another confluence right there. And now price is going up. Take profit 1 has been hit. So the trade has been validated. This is a 3-to-1, 3.2-to-1 trade. Very good trade. And let's see. Take profit 2 hit right here. And to be honest with you, that's more than enough. That's a 3.2, which you don't get no better than that. It's a good quality trade. In and out. Took all but 1, 2, 3, 15 minutes for the first take profit. Another 30, 40, 50 minutes for take profit 2 to get hit. 2 trades in 1 day using this simple method on how to use fibs and raw price action, candlesticks. Very simple trading model, very easy to get. Literally is 4 steps. Very simple 4 method step strategy. Find a higher time frame. So the 4 hours daily and up. Wait for swing highs and swing lows to be met. That's more so on a 15, 5 minute time frame. And then you wait for previous supply and demand retest. Once again, that's on a 5 to 1 minute. You want to be on the lower time frames to get a crispier trade. And then you're gonna find a suitable trade for the next swing high to swing low, and then you'll get in the trade and swing it to the next high and low, take profit.